This is the fourth restaurant stock I'll be screening. YUM stock, Yum Brands Inc. Yum operates the brands like KFC, Pizza Hut, Taco Bell, and more. To be honest, I'm more of a KFC guy than a McDonald's guy. So if you ask me what I'd rather own, it would be Yum than McDonald's. But again, you want to own these companies at the right prices. Although, it's not necessarily the whole of Yum, but if KFC were to stand alone as a public company, sure, I'd rather own KFC than McDonald's. The reason why I wanted to even screen these restaurant stocks is because most of them I just don't see going away. It's so ingrained in our lives that we'll always find ourselves indulging into their products. This is a Warren Buffett style of investing. I'm so sure he's eyeing some of these restaurant stocks, and I won't be surprised he'd be an owner of some of these stocks. Anyway, this is the valuation summary for YUM stock or YUM stock. They're trading at a very reasonable levels of multiple. Although still high, if you're a tight-knit investor just like me, it's trading at 1.12 times their margins. I have here 40% margin of safety for Yum because I think their revenues might have capped. Their revenue growth don't give me some sort of assurance that it won't go down any further or what. So 40%, I think for margin of safety is reasonable for stocks like this. I could be a buyer of Yum at 14, 16, 18 PEs. Their revenues are pretty low compared to the likes of MCD and SBox. This is consolidated revenues already and they're low. Imagine at 6.6 billion sales trailing 12 months for KFC, Pizza Hut, Taco Bell. That means they're generating very low revenues. I'm actually quite surprised I didn't know about that. Yum is down 20% of the highs. EPS is increasing nice and slowly. OSN is decreasing. Good, they're buying back shares. How much shares? They bought back 46 million shares in 5 years. Price to free cash flow is still too high at 23.1. I want this below 20. Their payout ratio is 41%, so I think dividends are safe with Yum. Their prospects for buying back shares and dividend increments are higher than that of McDonald's and Starbucks. Historical data suggests it's trading around its normal PEs, 1.01. PB ratio is not applicable, meaning their total equity is at negative, implying their liabilities exceeds their assets. Not a good look for the stock. Current ratio for the quarter is good at 1.08. Debt levels, unfortunately, are very alarming for the company. Here's my verdict of Yum. I don't own the stock. I don't think you should pay premium for the stock. I'd sell this if I were you. Never short though. Fair value is around $100. Intrinsic value is negative. I'm not surprised. Their PB ratio is technically non-existent. The company is worth nothing if it gets liquidated. Although, long term, I think these numbers should ease up. I still see their company operating for the next 5-10 years. Although, their financials right now are not looking great. I have here my entry PEs and prices, 14, 16, 18 PEs. I could be buying Yum at $99, my highest entry price. Looking at charts, $100 is our fair value for the stock, and around that our high entry price. 3% dividend yield is at $76. I care about my dividends, and 3% dividend yield is like my target entry price for most stocks. Those are the only levels I'm watching for the stock. It would be great to get that 3% yield, but I highly doubt we'd reach those COVID lows again. But I'm hopeful though.